What's up, All Stars? James Yancey here. Good morning. Today's October 10th, Thursday. CPI is printing right at this moment. So we're just kind of waiting to see what the numbers look like. So the market is reacting the numbers coming out. Prices spiked down and spiked up. We're looking at a 1 hour chart right now. Okay, we've got the numbers. And they are good for interest rates. So we should see some volatility to the upside at some point today in an ideal world. We still need for that to play out. So if you recall, if you watched yesterday's video, I said I wasn't going to share with you what happened. Basically, what I was going to say when I pulled out this tool was that we would potentially go up and down. So what can happen during a news print like CPI is you can see price go high and low and take out the stops on both sides of the market. Okay, that's simply just what happens because people utilize a strategy. Some people want to go long, some people want to get short, and both of those people are going to lose, for lack of a better way to say it. So just to kind of go over the numbers with you. So again, this does not mean rates should improve. It means the news is typically, if the market acts as it normally would, the market and rate should improve. But we'll have to see. Again, we're always waiting to see how the market digests the information. But core CPI was forecasted to come in at 0.2%. So inflation came in a little bit higher than expected. But unemployment is where I said this is potentially good for rates. The claims were higher than forecasted. So CPI is only 0.1%, whereas the unemployment claims are 27,000 higher than expected. So that should be offset the CPI measure. However, we don't know how the market's going to digest the information until it actually is coming out. And you can see right now, it looks to be positive. So you might see rates come out better this morning. But again, we still have to wait and see. There's a lot to unfold. Typically, this takes, 15 to 30 minutes to digest to see what's actually going to happen in the market. So, but again, you can see that its price is beginning to retrace just as we said. So you can see that spike down. If we go to a day chart, let me just make this our large chart. Okay, so let's see where price traded down to over here. Okay, so I'm just looking over here to see if we filled one of these volume imbalances or not. We did not. We almost came into one, but whatever. Doesn't ultimately matter. I'm just kind of checking something out there. Let's see here. So again, we don't have to retrace here, but if we do, we've done exactly what we've expected. I'm going to pull that fib up just to see where we came in regard to that ratio. And we just, again, potentially, if we retrace from here, we could look at this as, again, if traders know about the Fibonacci zone, those traders may have been stopped out right there just to stop those out. Because again, people may have put their stop loss right here because price was here. And they're thinking, well, looks like we're respecting this Fibonacci zone. Let me put my stop loss here. And then that stop loss was taken and we're going to the upside. So again, that's why we wait to see what actually is going to happen. People call that confirmation. If you're trading or if you're just new to this and you're learning some of the terminology, we're waiting to see actual evidence, is how I like to say it. We want to see evidence that we are correct in our thesis and our hypothesis. Last thing I'll mention before we go is, again, we do have this imbalance up here, and that imbalance is at the 50% fib. So we could trade up here and trade back down. We may trade up here today. We don't know what's going to happen yet. Again, we're just waiting to find out. So let me clean up the chart, get rid of this stuff. One other thing I want to show you. So If you notice, every time we've looked at this chart, we're looking at higher time frames. The reason for that is